Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading, AI technology, crypto portfolio building, and real estate short-let investments can be able to come and learn the right formula to get into this business and become profitable in this business, all by subscribing on our website for a package and practicing what you are taught to be able to get the results you desire. My passion is leadership and financial freedom, and what makes me happy is to see the transformation in the lives of the people in the world when they become less bothered about money and live the life that they love. So this market fundamental and technical breakdown is for the time period of the 22nd of January 2024 and 26th of January 2024. Okay. So if this is your first time, don't forget to smash the like button, subscribe, and click the notification bell icon whenever we go live trading within the week on Tuesdays, Wednesdays, and Thursdays, either London session 8 a.m. or New York session 1 p.m. You can be notified to join us to trade live, see our live trades, and also see our live analysis to be able to benefit from this. Okay, so with that said, how this market fundamental and technical breakdown goes down is that I'm going to share my chart. I know a lot of you are hesitant to see my chart. I'm going to share my chart and I'll go through the different pairs and currencies I am monitoring at this moment. Then to wrap it up, I will show the fundamental angle, which has to do with the volatility. One thing I got to know in the book, the day trading of the financial market, is that what makes the markets move rapidly within a short period of time is fundamental analysis. So we're going through fundamental analysis. I am a day trader and I would like to know the specific day and time whereby this fundamental news event is going to move the market to a specific direction. Okay, so I've said enough. I'll share my screen right now. Okay, it's loading. Okay, so I guess you can see my screen and I hope you can hear me. Please, if you can hear me, type on the comment section why. If you can hear me, please type on the comment section why. Okay, and if you have any questions along the line, don't hesitate to drop your questions and I'm going to answer them as we go along. Okay, so this is what we're looking at now, DXY, which is the strength of the dollar. DXY signifies the strength of the dollar. So let's go to the higher time frame first. Okay, top down analysis. Let's go to the higher time frame first. So for DXY on the daily time frame, what do we see? We see that the market was inside a very big expanding flat. Okay, a very big expanding flat at this point. Okay, and the market started going to the downside. Then it didn't take out this low and started having a corrective structure. So what I see is that this is a 5 wave structure. 1, 2, 3, 4, 5, and the market needs to give us A, B, C corrective structure to the upside. Okay, so currently I see DXY gaining more strength. Okay, uh, within January to February, because in the book, day trading the forex market, when it comes to seasonality, the market tends to always favor USD on the first month of the year. Go and check it. It's a myth within the stock market. And I was going through day trading the financial market book, and they say seasonality always moves the market in the favor of DXY every January. Okay, they say 9 out of 8 times, if you check the past data from now to 10 years ago, 9 out of 10 years ago, the market has always favored USD on the first month, January. So with that said, we're still expecting what corrective structure on DXY, corrective structure, and then continuation push to the upside. Okay, so that's what I see currently on the daily time frame. So if I go down to the 4 hours time frame, it's going to be quite visible. So currently we see that DXY is creating more of is an uptrend. Okay, the trend is still uptrend. Okay, so guys, don't be confused about what you see. The trend is your friend, but currently we are trying to get the pips within this little uptrend we see on DXY. Okay, so that is what I see currently on DXY. Let's clone this line. Okay, I can see everyone can hear me loud and clear. That's fantastic. Okay, so let's do this way. Okay, so on DXY I see that this is an uptrend, but we already know, looking from the daily time frame, that DXY is what on a corrective structure of this big wave. It is on a corrective structure of this big wave to the downside. So they had an accumulation over here. The market had an accumulation over here, and currently what do we see? We see the mark up or the push up. That's after the market broke that level. So this is what I see for DXY. This continuation push to the upside is going to respect this trend line and have a corrective structure down on this trend line before the continuation push to the upside for DXY. So dollar is still going to gain more strength in future. So based on the market maker methodology, this was what accumulation. It was accumulating orders. And what are we seeing now? The mark up. Okay, so we're still on this mark up trend. So we are just trading this corrective structure. Okay, so you should try and understand. We're taking it bit by bit, week by week. So that's what I see currently on DXY. So we're going to go to the next pair. The next pair on my list is Euro USD, which is highly correlated with DXY. Don't forget to like, share, and subscribe so you not miss any of our weekly live trading Tuesdays, Wednesdays, and Thursday. So let's go to the higher time frame first for Euro USD. So for Euro USD, I went to the daily time frame because this is top-down analysis. Let me start from the monthly. So I will show you guys a little sneak peek of top-down analysis. So on the monthly time frame, what do we see? We see that DXY has been on the downtrend. So the river has been flowing to the downside. So nevertheless, if the river is flowing to the downside, we could still get some buy opportunities. And if you look at the weekly time frame, where do you have price? This was a massive area of support. Market broke it, came back down, turned it into what over here was another support. Market moved up and turned there, as in respected there again as a support, and is now moving to the upside. That's what we see on the weekly time frame. So if you also look to the left, let's look to the left. The market came down here from this resistance. Okay, the market came down from this resistance and formed there as support, but broke that support and tested there as resistance and continued pushing down. So this is more like a solid block, but this is more like a wire that the market could just come over here and break it through. Okay, that's what I see for Euro USD. Nevertheless, remember, DXY is trending to the what? To the upside. DXY is what? Trending to the upside. And if DXY is trending to the upside, we're expecting Euro USD to do what? Trend to the what? To the downside. Okay. Nevertheless, that we are seeing a lot of what? It's more like a correction on the weekly time frame. So this is currently daily time frame. Well, on the daily time frame, and you can see that this trend line, the market has respected this trend line with this support over here, and also respected this trend line with this support over here. Okay, and if you look closely, we can see that the market was formed this high and also this high. This is forming like an ascending wedge, and the strategy of trading an ascending wedge is that the market breaks downwards from the downside most times for ascending wedge. But we're not going to predict or force our own predictions to the market. We're going to trade the market according to what the market gives to us. We're going to trade the market according to what the market gives to us. We're not going to put on our own predictions. And we're just going to trade the market based on what's it called? Probabilities, exactly. So if you look closely on DXY, since you already know that this is an uptrend line for DXY and sorry, Euro USD, and the market is gradually what coming to the downside on Euro USD. The market is gradually coming to the downside on Euro USD. So what I see currently is that the market is going to what push to this upside. Okay, after it pushes this upside, we're going to see a drop. Okay, and it is going to be heading towards this particular order block that has not been fulfilled, which is going to be a supportive area. Okay, that's what I see for Euro USD. Okay, that's what I see currently for Euro USD, because let me tell you again, seasonality is playing out on Euro USD. For the last 10 years, I went through history and I saw that 9 out of 10 that euro is always weak against dollar every January. Go and do your own research, okay? Also go through the book, Day Trading the Forex Market. It's going to show you that 9 out of 10 times euro is always weak against the dollar during January. And if you can see, this was January 1st over here, and the market has been dropping. It had what? An impulsive wave, corrective structure, impulsive wave, another corrective structure for another impulsive wave. This is a 5-wave structure. This is a 5-wave structure. 1, 2, 3, 4, 5. Then A, B, C. You get it? So we're waiting for what? This 4th structure to be completed. Then we push the downside. Let's see what sentiment is saying. Let's see what sentiment is saying for Euro USD. Okay. So on Euro USD sentiment, we see short is 49% and longs is 51%. Exactly what the banks want. The banks want you to think that the market is going long, and a lot of retail traders now are buying the market. Okay, but this could be a short-term reaction based on sentiment. But the banks are still what on the short. That is why you can see 95%. So the banks now will be aiming for the liquidity in this market. They are aiming for the liquidity in this market. There is still high chances that the banks can push this market to the downside, grab this liquidity before they push to the upside and take this market to the downside. This is what possible. This is possible, okay? But based on what I see currently on Euro USD, we're expecting market to come into this this support level, this resistance level, and then push to the downside to also emulate the structure we see on DXY. Exactly the trend we see on DXY, to emulate the trend we see on DXY. It's almost close to that trend line. So let's see what happens. Okay, let's see what happens. This to emulate the trend we see on DXY, but let's see what happens. Okay, so we go to the next pair. The next pair is AUD USD, and bet me, when Euro USD starts selling, the massive volume will come in because the overall direction of the market is on the sell. So let's go to the monthly time frame for AUD USD. Please, if you have any questions, drop it on the comment section. If you're confused about whatever I'm saying or whatever I'm doing, you need me to talk more a bit about it, just drop it on the comment section. Then AUD USD overall trend on the monthly time frame is what? Downtrend. Okay, that's what we just use the monthly time frame to do. Then we go to the weekly time frame. What do we see on the weekly time frame? On the weekly time frame, we can see that the market has been moving to the downside, okay, creating lower lows and lower high, lower low, lower high, and didn't create another lower low with this low here and start pushing to the upside. So there is high chances that there is a massive support area over here for AUD USD, the market respected over here. Okay, so after the market respecting this level, it started pushing to the upside for AUD USD on the weekly time frame. Well, so what do we do? This trend line now, the market got to this trend line. It has been respecting for a very long time. The market respected this trend line on the weekly time frame. It respected it 1, 2, 3, 4, and now the 5th time. So that's a massive trend line, and the market is trending to the downside, which we know that the monthly is also going to the downside, and the weekly is what has respected the trend line. Okay, so then we go to the daily time frame. What do we see on the daily time frame? On the daily time frame, we see that the market trended to the upside. Okay, the market trend went to the upside. After it trended to the upside, it broke that trend line. Okay, the market went up, and this was it. It broke that trend line. That trend line has been broken. Okay, so what I'm seeing currently that is happening on AUD is that the market wants to go and test that trend line that it just broke and then continue the drop to the downside. That's what I see for AUD. Okay, so the market is going to test that trend line. This particular trend line it broke on the daily time frame. You can see there that the market broke it. Okay, it broke it, and then after the market broke this trend line on the daily time frame, we expect it to continue dropping to the downside. Let's go to the 4 hours time frame. Let's see what the market is doing on the 4 hours time frame. So on the 4 hours time frame, we have two pictures playing out right now. We're already in on this trade. We're trading the corrective structure of AUD. I call that the signal for the VIP, and most of my students are making good money from it. And I'm still holding currently. I didn't close it during before the week ended. Okay. So for AUD, since you already know that monthly is sells, weekly has already respected the trend line above here, and daily is currently what retesting a particular trend line that has been broken, an uptrend line that has been broken. On the 4 hours time frame, what can we see? This is a corrective structure. This is a corrective structure, and what you're seeing right now is what they call the rhombus. The rhombus. Okay, so what this does for us is that this shows us points of interest where the market could get to and then reverse. Okay, this is one of the strategies I learned from Forex when I started Forex early. Okay, so at this point right now, we already entered our buys on AUD at this point, and we have been holding all throughout the weekend, Thursday and Friday. So when the market gets to this particular point of the rhombus, I'm going to be doing what? A break even on my trade, taking my stop loss to entry, and I'm going to be taking 50% of my trade off. If I see that the market breaks this rhombus and then continues going to the upside, at this point I'll be taking away the remaining 80% of my trade and leaving 20% to run. If I see that the market wants to keep going up, which there is low probability of the market continue as in entering this part of the rhombus, and I see a reaction to the downside, I'll then be aiming for what? Taking out all my trades and then aiming for the sales to the downside from this level. Okay, so why I think that the market is just going to come into this point and then have these sales is that I might be taking 100% of my current trades off from this AUD when the market gets to this point. But when the market gets to this point, I'm taking 50% off. I'm taking my stop loss to break even, which is going to be what? Trade free. I'm risk free on that trade. Then when the market gets here, I'm taking the remaining 50% off, and I'll be off this trade. Then be waiting for the main wave to the downside based on monthly down, weekly down, daily retesting a trend line, uptrend line that was broken, and then when I see my 4 hours time frame entry, I'll be calling the trades for my students on the VIP. So not to miss out on any of our trades, you can join our Telegram channel. The link is on the description. And this Telegram channel is the free one. But if you want to get advanced insights and headlines and news and tips, join the VIP. The link to subscribe is on the description. Just click on the Cello link and it will take you to my webpage instantly. Let's see what the sentiment is saying. Sentiment AUD what's going on AUD. Okay, so sentiment for AUD currently we have no, this is another pair. Yes, currently we have 69% longs on AUD and we have 31% shorts. The banks are shorting AUD, that's why we have 31% shorts. And currently I see that longs based on retail traders, we have about 69% of retail traders on the long positions. So we need to be very careful. We need to be very careful. Well, as the market heads into this point of interest over here, we need to be very careful. We take a little positions off, and then we aim for this high. If the market continues going to this high, is good. Okay, we maximize more profits, but we'll be taking 50% off from here because the banks could just from this level start pushing the market massively down to the downside. Okay, and they'll be aiming for we have this particular order block here that has not been filled. The market could be aiming for this order block that is here. There is a support level that has not been filled, so there's high chances the market can do this. Okay, so we'll be watching out very very closely. Then the next on the list is gold. God's money. Gold. God's money. Man, I love gold. So let's go to the monthly time frame first. So on the monthly time frame for gold, what do we see? We see the market going to the upside as well. Gold has been going to the upside, bro. Gold has been going to the upside. See, for a very long time since which year is this? 2001. Gold has been going to the upside. Okay, so it has been going to the upside. So up trend for gold. So we go to the weekly time frame, and what do we see on the weekly time frame for gold? What we see on the weekly time frame for gold is this. Okay, this is a very massive area of resistance. What I mean by resistance is whenever the market gets to this point, it sells. The price of gold drops. Whenever the market gets to this point, it sells. The price of gold. Whenever the market gets to this point, it sells. The price of gold. And then we saw a massive breakout last year before the year ran off. Okay, ended before the year ended. We saw a massive breakout over here, and after this market going up, it came back down. Okay, and there was a lot of traders that lost money due to that spike up, spike down. So based on what I see on the weekly time frame, I see that gold just came and tested a particular area of resistance and turned it into support. Let's look back. Okay, this was the highest point, resistance, but weak resistance. But now gold broke that resistance and turned it into support. What are you seeing? This could be a level of gold pushing more up to the upside to about this level of $2,280 per ounce. So that's what I see for gold. And this is an area of uncertainty. We're currently on an area of uncertainty. Gold has not been at this price point before in time. So based on the daily time frame, what do I see? I see that the market is has a very massive uptrend it has been respecting. This is the first touch, the second touch. We used it to form this resistance on the uptrend. Okay, so from this level now, we have two things that can play out. The market has already respected this weekly resistance that turned it into support, and from here we can see the market continuing the push to the upside. On the 4 hours time frame, what do I see? On the 4 hours time frame, I need absolute what? Certainty. I need absolute certainty. What do I mean by absolute certainty? I can see that there is an area of resistance over here. There is an area of resistance over here. And currently we are long on gold. Okay, most of my students took the long on gold. So what I expect from gold is that from this level now, we'll be pushing to the upside. And if we break this point, okay, if we break this trend line, this down trend line, okay, and then we break also this resistance over here, this is when I'll now be looking for more longs on gold, adding to my winning positions. But when the market, which I am currently in on the long on gold, from this point, that's where I entered my long on gold because I called out the analysis on Friday. When it gets to this resistance, I'll be taking away 80% of my trade, and I'll putting it on break even when it gets to this point. Then when it breaks this trend line to the downside, I'll still be holding my trade. But when it breaks this resistance, I know that yes, buyers are massively strong. I'm not going to be forcing my forecast on the market. The market could simply get to this point and what next? It could what? Form momentum and break it. So from here now, we'll now be looking for what the corrective structure back to this weekly resistance and then the massive drop on gold over here. This is about worst case scenario. This is about how many pips? This is about this is massive. This is about 18,000 pips drop. 18,000 pips drop on gold. This is a swing trade, bro. And you could hold this to like 2, 3, 4 months and you're still riding a profit. So, but currently, based on day trading methodologies, what I see on gold is this. Gold is heading to this trend line, okay? And when it heads into this trend line, at this point, when it gets to this resistance as well, I'm taking 80% off. When it takes my hits, my take profit. Then the remaining 20%, I'll put it on break even, putting my stop loss into my entry. And when it gets to this point, then I'll be adding more winning positions when the market comes to retest this resistance and turn it into support. Then we'll be looking for more buy opportunities on gold. But if the market does otherwise, gets to this resistance and starts selling to the downside, I'll be patient and wait for my sell entries, okay, for gold. So when it breaks here, okay, and then I get another entry from this point, I'll be what selling gold to the downside. So I'm not forcing my predictions. I just have to see what the market gives to us. What about the sentiment? What is the banks doing? Okay, for the sentiment, xauusd. Okay, so the banks are longing gold. When the minority is 40%, the banks are part of the minority. The banks have some funds in the majority, which is 60, but 40% for gold. Banks are definitely what longs on gold, because the banks and hedge funds and institutions, they have the much capital, but there are few of them. While the retail traders, we are majority, but we have the less capital. So we just have to follow the market. We don't force our predictions along with the market. So this is what I expect for gold. Then to wrap it up, we have to go to BTC. Okay, no, we have under. I like to just analyze measures. Okay, it's just measures that I mentioned on my live stream. Major pairs. Those pairs combined with DXY, which is dollar. So currently on gbpusd, what do I see? I see the market coming into this resistance as well, just like I see on eurusd and audusd. I see the market coming to the resistance, and from this resistance we'll be dropping to the downside. There's liquidity over here. Market already took that liquidity and started moving to the upside. So from here now, I'm looking for the sell entries from here. When it comes into this support for GPUs, we're now looking for buys. My target is 1.285 for GPUSD when the when the market comes into this support for the buys. Okay, so that's what I see for GPUSD. Any questions? Any questions before we dive into the next pair, BTC USDT? BTC USDT. Okay, so for BTC USDT, what do I see? Okay, so for BTC USDT, like I told you guys, we're expecting market to drop. Last week, the market was at this position. We told you we're expecting market to drop, which the market has done. So from this point now, there was a drop, corrective structure, drop, another corrective structure, and then the final drop. So this is like a 5-wave structure. 1, 2. So let me do it with this. This is like a 5-wave structure. 1, 2, 3, 4, 5. Okay, then we have A, B, C, high chances. Okay, so this is what I see, and that's the markup I see currently. So after this corrective structure, I expect another drop on BTC USD. My major target is the $38,500 mark to start stacking, or 38,000. Start stacking. If I had intention to put in 100%, I'll put in about 50 at 38,500. This is not financial advice. I'm just watching the market and giving you guys what I think the market is going to do. So, but if the market insists on going lower, we'll be aiming for our second buy entries within this zone over a 35,000 mark. Okay. So, for Ethereum is another juicy investment opportunity. It's less than it's really less than 5 million naira. You can get a single Ethereum. It's a good opportunity. So for Ethereum is respecting structure just like I intended. I expected it to come back into this resistance, which it has done. After it came into the resistance, I expected it to drop lower. We have a trend line to the upside for Ethereum. You can see that the market has been respecting this trend line. It bounced off this trend line here, bounced off this trend line here, and bounced off this trend line. So the market is quite far from this trend line. Okay, so we expect the market to get closer to this trend line, and we have a support area over here. When the market taps this support area, this should be about $2,300 mark. Okay, $2,300. That's when you need to start stacking Ethereum. $2,300. This is not financial advice. This is just what I'm seeing on the chart. But if the market could come down to this validation point, okay, this is $2,250. Okay, you need to buy. If you had 100% to put into Ethereum, put in 50 at that point, and the market drops lower, you can see that 2,000. Okay, but this is probably a 20 to 30% chance that this could happen, but this is about 80 to 90% chance that this could happen. So that's what I see for the technicals. So before I dive into the fundamentals, I'd like to drop some opportunities with everyone that has watched to this point. So for the opportunities, this is our store, Internet Digital Link Store. The link is on the description, okay? The seller store. And on this seller store, you have the opportunity to get our book for free, How to Make Six Figures in 6 months on Airbnb without owning a property. So this book was written by us, 10x Digital Link. It gives you the insight, the secrets, the steps on how we make money using real estate, okay? And then we also have this book on how to become a passive income machine, our account management services, and also the copy trading services which we offer. This is the information in this book, the testimonials, the success stories, and the steps we take to be able to achieve this is all inside this book. Then we have our crypto and forex offline trading journal. We have the online trading journal, which we introduce to every of our professional students and also our paid students, which they use. But if you are someone that wants what the old way of tracking your trades, you can get the crypto or and forex offline trading journal over here, and then we will deliver this to you. Then we also offer 10 digital lane signal services. These are signal services for a month. It's just $12.34, okay? And you can be able to get access to our VIP, where we're going to share with you daily tips. We're going to share with you daily chart analysis. We're going to be sharing with you signals. We're going to be sharing with you live trading opportunities, and we'll also be giving you opportunity to gain access to a fund, a prop firm account of $5,000. We are doing this giveaway currently during this year, January 2024. So also we have a 10x Digital Lane education course. This is where you now have to choose the education course you want to subscribe for. We have different education courses starting from the 1 month education course to the 3 months education course to the 6 months education course and the 1 year education course. Discount applied, okay? So as soon as you select that, you click to check out, you put in your details and you check out and be able to gain access to our VIP insight education on how we trade the market. We break the market down, we analyze the market, our trading strategies, the risk management approach, the psychology we approach, and then you also get access to our textbook. This is our Forex Mastery Guide textbook, okay? This guide now is going to give you the insight you need to be able to what? Understand each step of the market, psychology based, risk management based. This is our textbook, official textbook for the academy. So with that said, please, if you want to know more, the link is on the description. If you have any questions, drop it on the comment section. Let's go through the fundamentals. So now this is AUD USD. We have that on Tuesday, the January 23rd, 2023. This is Asian session, NAB business confidence. This has to do with the confidence of businessmen and women within is that Australia? Yeah, that's Australia, and this is New Zealand. Yes. Then if the figure is higher than this, if it is -6, which is higher than -7, it is good for AUD. We are going to see some buys in AUD. Then I love this week because it is Bank of Japan interest rate decision. So on Tuesday we have Bank of Japan interest rate. Okay, and for a long time the Bank of Japan have been leaving the interest rate as -0.1%, which is there's high chances on Tuesday that a lot of Japanese yen pairs will lose their strength. Okay, and this could see some buys on GBP JPY, could see some sells on USD JPY, some buys on euro JPY. Okay, so watch out for this news. It's for by 4 a.m. in the morning, but we're looking out for our trade entries probably New York session on Monday. Okay, then we have CPI for New Zealand. We have the Judo Bank Service PMI for Australian dollar, and then Judo Bank Manufacturing PMI. No high impact news for the New York pair and the London pair, Euro and GBP, USD and CAD. No high impact news. But on Wednesday, we see balance of trade for Japanese yen. That's Asian session. But on New York, London session, we have HCOB Manufacturing PMI. Okay, it has to do with the manufacturing sector of France. Okay. Then this is service PMI, the service PMI of France. So if this figure is, if you have a figure higher than this, it's good for the euro pair. If you have a figure higher than this, it's good for the euro pair. Okay. Then we have service PMI for Germany, manufacturing PMI for Germany. Exactly, London session Wednesday, which we're trading live on Wednesday too. Then we have manufacturing sector for Euro Central and service PMI for Euro Central. which is going to be all rounding off from 9:15 a.m. to 10 a.m. on Wednesday London session. Then we have GBP manufacturing PMI and service PMI. Then on New York session we have USD service, global service PMI and global manufacturing PMI. To wrap up that day, we have Bank of Canada monetary policy report. Okay, this is going to be live streamed and it's going to cause some volatility in the Canada pair. So on Thursday, this is one of the days where I'm very interested in, which is a euro interest rate decision, which is what a lot of traders will be focused on Thursday, which is during New York session. So we'll be avoiding trading London session, but we'll be trading New York session on Thursday, euro interest rate decision. And based on everything I've watched from the World Economic Forum, they say that interest rate has been dropping and inflation has been reducing in a lot of areas of the world when it comes to Europe, USA, a lot of areas of the world. And currently, they are not seeing further interest rate hikes, but interest rate could be kept stable for some time. And probably the third quarter of this year, US is planning on having a cut of interest rate. But what the Feds are afraid of is that if they cut the interest rate, it's going to seem like they are in favor of bidding, because when interest rate is cut, there is a lot of stocks increasing in value. The ripple effect of cutting interest rates, stocks will increase in value in the United States, and this could cause a lot of boom in the economic activity, which is going to be like a support for bidding. So that's why the Federal Reserve is trying to find a way that they can be able to make this work out and let it not be like a geopolitical activity. So this over here is on Thursday, New York session as well. We have durable goods order X defense month over month. This is by 2:30. Durable goods order, which has to do with goods that are not eatable. That's the orders from different sectors. This is defense sector, transport sector, and this is month over month. So we're more focused on the month over month, which covers up every other thing. Then the GDP growth rates quarter over quarter for New York session, and then goods trade balance, the total imports minus the total exports. Anyone that is higher is going to show the figure over here. So if the imports are higher than the exports, which is bad for dollar. If the exports are higher than the imports, it is good for dollar. Then continuous jobless claims, those who claim that they don't have jobs, the figures will be announced on Thursday as well. A lot of high impact news. So we focused on euro USD because I can see this interest rate and this USD trade, it's quite similar. So you could see a massive drop, massive drop on euro, about 50 to 100 pips drop on Thursday, because if this interest rate is unchanged, it's going to make euro to be weak. And then if we see durable goods and GDP to be positive for dollar, we're going to see a massive drop on euro USD. Then on Friday, we have GBP consumer confidence, which has to do with what the consumers in the economy think, if the economy is increasing or the economy is decreasing. So if we have a figure of -15, which is going to be good for the Great Britain pound. Then the same thing for Germany, we have consumer confidence for Germany. And then if we see something like -20, which is good, this is meant to be on the positive area, but since it's on negative, or any increment we see, we're going to take it as a positive data. The unemployment rate, we don't need this figure to be higher. We need it to be 11 or 10, which is going to make euro to be strong. But if it is higher than 12, it's going to be bad for euro, I'm telling you. Then on Friday, we have core PCE price index month over month. We have 0.1% and 0.2% core PCE. Then we have personal income month over month and personal spending month over month. Based on this data I see over here, this last data that ends the week, it doesn't have much impact in the market or moving the market like expected. So the news that moves the market with high impact is the interest rate news, the CPI news, the inflation news, the balance of trade, and also the monetary policies. So thank you so much for watching to this point. I guess no one has any question. I've not seen any question about any particular topic on the comment section. So I really appreciate that you guys are watching and understanding this to the fullest. Please don't hesitate or don't forget to drop the like, subscribe, and please click the notification bell icon so whenever we go live trading, you'll be notified to join us to trade live. Okay, I really appreciate your time. I really appreciate your efforts. Okay, and I hope and I pray that you guys have a profitable trading week. Peace.